Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guide Podcast, and today we are going to discuss new construction and what might happen with the new rate changes that's going to be hitting us here with the Fed. So let's hit the Fed rate changes. So we know that in September is going to happen. They're going to be cutting the Fed funds rate. Well, I've been getting emails galore of people in the process currently that are curious that during the process, could we get another rate decline? It's possible. Yeah, absolutely. But as we've discussed before, our industry is very, very touchy and very, very reactive just on words being used by the Fed. Speculation, right? Anything they say or do, without anything going into effect, we react. So in the last 30 days or so, about give or take slightly, we've seen a massive rate drop, right? We're back into the low sixes, mid sixes. It just obviously depends on your program credit profile and all that. But the rates are significantly more attractive, and it's already reacted to the news of a rate cut happening this month in September. So when it actually does go into effect, will we see another rate drop in our industry? I don't know. I don't think so. I think we've already reacted to it. I could be wrong. There might be people on here that want to chime in, and that by all means have a ball. But I'm concerned that people in process think a rate cut happens, and then the mortgage rates are just going to drop again. And I don't know if that's going to occur. I really don't. So we'll see what happens. I think we've seen a lot of movement when they initially announced a rate cut was going to be a quarter of a point. Now they're definitely thinking it's going to be a half a point, and a lot of that has already been taken into account, I think. So heads up there, guys. If you are in process, it's possible to get it renegotiated down. I usually recommend at least a quarter of a point drop in order to do such. Every lender is going to be slightly different on how they can handle it, if they can even do it. Just remember, you decided to lock, so you are protected from any kind of rate increases. So it doesn't come with, you can't have your cake and eat it too sometimes, and it's just the way it is, right? You protected yourself from the rates going up, but then if the rates go down slightly, that could benefit possibly the lender. Everybody's wanting to get those rate cuts, which I get it. I'm a consumer too. So anyways, let's talk about new construction. So the only reason I'm bringing this up, it's September. All right. So people are still breaking ground, and they're going to continue to do so for the next couple months until the ground freezes. Okay. And they're going to try to get everything under roof so they can work inside over the wintertime. So this may not be for the people that are trying to do that right now if you haven't started planning with your builder or selected a builder, or even know if you're pre-approved for new construction. But let's talk about it so you're prepared over the wintertime. If this is something you want to do, you're ready to pull the trigger December, January, closing a construction loan and then getting on the books for your contractor for the spring. Okay. Again, even doing that might be a challenge because most contractors and builders are probably already booked up in the spring, so it might be summer, fall before they even look at entertaining your project. But nonetheless, let's get ready for it, shall we? So as a lot of people I'm sure have seen, if you ever looked into new construction, it's not cheap by any means, okay? You can probably buy a house that's in existence right now for a lot less expensive than you can build, but will you find what you want exactly, which is when people turn to new construction? Houses on the market, they've seen a dozen of them, doesn't fit their needs, location, size, functionality, and they just can't pull the trigger. So they go, all right, that's it, I'm building a house. All right, so a lot of places you see out there require 20% down. Not all, just a lot, right? If you go to your savings and loan banks, your small family banks, that's just going to be the way it's going to be. Because construction loans are quite a risky proposition for lenders. There's a lot of market exposure from the time that you close your construction loan to your home actually being completed. We're not going to dive too much into that piece. It's a little convoluted and complicated, and I might lose some of my 7 followers, and I don't want to do that. So let's talk specifically USDA new construction. All right. The reason I wanted to bring this up is on the topic of a lot of places want 20% down, 15% down, a lot of money out of pocket, and that deters a lot of people from wanting to build because they just don't have the savings for it, and that's understandable. We're in tough times right now from a cost standpoint, cost of living. So USDA new construction is something that we do. There's a one-time close out there. We used to do it. We just don't anymore. All right, so we do it as a 2-time close, and I'm not getting into why we don't do the 1-time close, other than kind of the secondary market kind of dried up on it a little bit, just a little bit. All right, so there's a handful out there that still do them. So let's talk about our 2-time close program. So you can do a couple different things with it. First, you can purchase a lot inside of a construction loan. Okay, so you want to build a house. Question is now, where do I build? You can purchase the lot inside the construction loan. You can build the home on an existing lot that you own. All options are available. Now, hear me when I say this. We don't, here at Western Ohio Mortgage, case-by-case basis, but traditionally speaking, we don't do lot loans, okay? It's not a traditional mortgage secured by land, but it's not secured by a residence, which is what we prefer. So anyways, step one is meeting with your builder and your lender, okay? Let's figure out how much you can get pre-approved for, all right? If you can get pre-approved for certain loan programs up to a certain amount, it sticks regardless of what type of construction loan you're doing. So that's all fine and dandy. So just a normal pre-approval. Here's the loan amount, rough rates, you're good to go. Step two, picking your builder. All right, so this is going to be your more challenging step. A lot of people don't like to deal with this, and they go with a one and done. They meet with one person, done. This is my guy. He told me everything I needed to hear. I'm moving on with my day. We're rolling with him. I do suggest shopping builders. Okay, they're all going to offer something different. Quality construction is going to be different. Time frames are different. Communication, they're all different. All right, it's just like choosing a lender. We're all a little bit different. Okay, same end product for the most part, but different process. So I do suggest that you start that process with meeting your builders, vetting your builders, and starting your estimates. Why is this so important? Because we see so many people that are pre-approved for a construction loan, but they go out there and they find a lot and get in contract, and they say, here's my contract for my lot. Let's get this started. And I ask, have you met with the builder yet? Well, no. Well, I kind of need that, right, to close a construction loan. I need to know what you're building, how much you're building, what's going on here. So step one, pre-approval with your lender. Step two, meet with your builder, okay? Finalize your plans. See what you're wanting to build officially, okay? Get your cost breakdowns, okay? You want your elevation search, like the side views and the rear views, the elevation piece, to see how this home is going to be constructed. And the reason they want that specifically is flood zone purposes. So you can't intentionally build in a flood zone, by the way. All right, you can't just go find a property. Oh, it's in a flood zone. It's cheap. We'll get it cheap because it's going to flood. You can't build there. All right, just take it out of your mind. Anyways, side views, rear views, all this stuff, all their drawings. They're going to do your floor plans and the spec list. Okay, what's going into the property? That's your spec list. So the reason that's so important is because when we do these appraisals, we do a construction appraisal to determine that your value is going to be okay there, right, when we do your end loan. And the appraiser has no idea the quality of this home. All they see is a floor plan, so they got your size, your bed and bath count, and they got your drawings. They hope they have your drawings, and it's not drawn by hand. Do me a favor. Please don't send those, all right? I've already dealt with that way too many times. So that's all they got to go off of. But what's the quality? What kind of flooring are we going to have in there? What kind of showers? Are we having tile? What kind of countertops? We got granite. We got formica. We got quartz. What are you doing exactly? Are they custom cabinets? Are they stock cabinets at Lowe's? What are you putting into this property? That's determining the quality, and that can help the valuation of your property. Okay? So, lender, builder, building plans, floor plans, estimate, specs. Okay? Need all that stuff. On your estimate, soup to nuts, excavation, well, septic, framing, you name it, all of it, all the way up to the last part where you have to do a final grade of your dirt up to your house, and we're planting seed, grass seed, right? Seed and straw. That's it. All of it, not piecemealed, okay? If you get an estimate and it's missing the septic, I get an estimate and it doesn't have the HVAC systems included, we got to pause and we got to go back to the contractor. We got to get that stuff going, okay, before we start disclosing this thing. We need to make sure our loan amounts are going to be okay. So there's the first couple steps. All right. Step 3, finding the lot, okay, assuming you don't already own a lot. And because we can close the loan, and at the loan closing of your construction loan, we can buy the lot and pay your sellers off. That'll be the first draw of your construction loan, is buying the lot. If you already own your lot, we could use lot equity and finance any kind of expenses with your loan into it, okay? So again, this is broad brushstroke stuff. I want to give you a little bit of guidance if you want to start this process. All right, so that's what we got, okay? Now, let's talk about what we're doing as a lender and how this works for us, okay? So I want to focus in on USDA construction. So you've gotten pre-approved, you've spoken to your builder, you got plans and specs. While you're speaking to your builder, we are going to vet the builder, all right? You're wondering, well, why does that matter to us? Well, trust me, we've seen a builder walk off with people's money and never return a phone call and leave the state. That's why we have to vet them. And guess what? It's your money. We might be lending it, but just because someone ran off with it doesn't mean I'm taking a loss. You, the buyer, are, all right? So that's something to take into consideration, all right? So we've got to vet the builder. We're going to do contractor profile, resume. We're going to get insurances, liability insurance. You got workers' comp. You've got all this stuff happening, kind of like a 203K loan, right? We're going to vet the contractor, make sure they have an experience of building homes. Okay, whew, that's a lot. So we've done all this. We vetted the contractor. We have your plans. We have your estimates. Now, once everything is finalized, your draw schedule is extremely important with your contractor. We're going to be working with them on it. They all want to get paid up front. That does not work that way. All right, regardless what your builder tells you and says, well, this is the only lender I've ever worked with that doesn't give me $100,000 before I start. That is BS, okay? They're not supposed to get that kind of money up front. There may be a small deposit. There might be something along those lines. The contractors and builders are supposed to get paid as work is completed. That is why there is a draw schedule, all right? So don't let them tell you otherwise. Okay, so on that topic, we got through the draw schedules. We're all done. So we got the draw schedule. The builder is vetted. We've got your plans. We got your estimates. Now we can order the appraisal, all right? We're going to order the appraisal, and we're going to get that puppy moving. Remember, the appraiser is going to be looking at your plan specs, all this fun stuff, and your estimates of what's going into this property to determine your valuation. We just want to make sure that the upfront valuation is going to be there on the end loan because we're going to go through a 6 to 9 month build process, and the market can change. Rates can change. Valuations can change. A lot of stuff can happen, okay? So there's that. So now we're getting to your loan piece. So USDA new construction, like I mentioned before, a lot of people want 20% down. USDA does not require any money down, okay? We structured as such where you can finance your closing costs in, we can finance your down payment, escrow. I call it a down payment even though it's not a down payment for this. It's an escrow hold to cover interest. There's a couple of options here. We can finance a ton of it in and cover all your interest payments during construction for the next 6 months, 9 months, however long it takes to build your house. Or when we close, you can say, hey, you know what? I want to escrow a little bit less. I'll pay the monthly interest every time we make a draw. Okay? That is an option for you. We try to keep it as low cost as humanly possible for the consumer, especially if you live in a house and we got to eventually sell the house prior to your end loan construction being completed. All right. We don't want to put you out. A lot of people will not do that. If you own a home, they're going to count that in your debt to income ratios most of the time. Again, I can't speak for everybody out there. So that's how this whole thing operates, guys. So on USDA, finance everything in. We can finance payments, interest, closing costs, you name it. It's all in there. As we move through this process and we continue to do draws to your contractor, once we're within about 30 days of closing, then we're going to start your end loan, okay? Whether that's you selecting USDA, whether you're wanting to do conventional, FHA, VA, whatever your end loan you want it to be, we will be able to squeeze you into the program, as long as you qualify, of course. So that's how we structure our deals. They do take some time, all right? A lot of people want to get in contract, close their construction loan like they're buying a house, and they think it's going to take 20 days. That's not the case. There's so much going on, and I didn't even touch on the title piece with doing plot plans and seeing where utility easements are and 3-step location surveys. I didn't even touch on that stuff. I want to touch on the things that's important to you, the consumer, and kind of the process of how this is going to work so you're prepared and expectations can be met. Okay? So I hope that information was helpful, guys. If you do have questions, you call us here at the office. All the information right here at the bottom of the screen. We do all the new construction loans with, like I mentioned earlier, via USDA, FHA, and conventional financing, and we're very, very flexible on how we can structure some of those deals for you and minimize your out-of-pocket expense as a whole, and it's very attractive. And builders out there should listen up to that. Getting consumers into having you build them a new house for almost nothing out of pocket is pretty impressive, right? Wouldn't you like to have something like that? it could open up the market for you builders out there if you entertain the USDA new construction option. So feel free to give us a call. Like I said, information is at the bottom of the screen. Subscribe on YouTube. Check us out on Apple Podcasts and Spotify, and we will catch you all next week.